You better look at big tech. We got a modest bounce back today after a pretty bad week last week. They're all doing well, except for Amazon. Look at that, down 25 bucks. So my obvious question is, has or did big tech hit a bottom last week? Is it now time to buy some of it? Let's see what Scott Martin has to say. Scott, first of all, address Amazon. Because I keep telling our viewers we were down $139 on Amazon on Friday, just on Friday alone. And we follow it up now with another loss of 24 points. What's with Amazon?
We're getting there, slowly but surely. You know, Stuart, this is a really tough reaction. And gosh, I guess in some cases the wrong one, at least I think so far, to the earnings report last week. So the market is really throwing Amazon out here. And, you know, like you mentioned, some of the other tech companies are managing to rally today in spite of that. So the reality to me is that Amazon's going to get to a level that's going to be attractive. It's probably a little lower from here. But with respect to how their business is behaving and operating, it's really not that bad. I mean, I don't think it's worthy of this kind of downdraft. So, to me, yes, Scott, in the next couple of days, we're going to be picking some up. Vivek
Wadhwa just was on the show 10 minutes ago saying that if you're a long-term investor, you really got to have these big tech companies. You've got to buy into them because the stuff they're doing a year down the road will be phenomenal. You're buying into that?
Yeah, I saw that interview, and I think he's exactly right. And here's the funny thing, too, Stuart, about the Amazon we know today, I think to your guys' point in the interview, is not necessarily Amazon we're going to know tomorrow or the day after that. And that's really what I think the market is getting itself into right now, is thinking, oh, my gosh, Amazon, you know, has some difficulties today. And they might, you know, given the earnings report. But that doesn't mean that in the next few quarters, Amazon's not going to figure it out. They're not going to churn out a better profit. They're not going to get into different business lines and make more profits and make more revenue. So to me, you've got to buy Amazon for a year or two down the road, not just tomorrow.
When I saw IBM is going to buy Red Hat and they're going to pay $34 billion for it, and then I saw IBM stock go down, and it's still down today, my first reaction was, you know, IBM is getting desperate to get back into big tech and moving forward. What do you say?
Yeah, I agree. I guess in one sense, though, at least they're doing something about it, right? I mean, Now overpaying for Red Hat isn't exactly the thing I would have recommended, but at least they're making a move because, as you've talked about on your show most of the morning, you know, IBM is behind on the cloud space, and Red Hat hopefully will help them with that open source cloud platform. But yes, to overpay this much for Red Hat, at least in my opinion, they probably paid at least a 50% premium of what I think Red Hat was worth on the open market. You know, to me, that's probably a little bit of a stretch, but something they needed to do to try to catch up to the likes of Amazon and Microsoft.
20 seconds left. Would you buy IBM at 123 where it is now?
I wouldn't touch IBM with your money. How does that sound?
Sounds like a categorical wouldn't touch it with a 10-foot pole. Scott Martin, thanks very much for joining us. We'll see you again real soon, promise. Thanks very much.
See ya.
You better check.